Hi everybody, this is Gary Dean with Sentiment Timing, and this is going out to some of the free members as well as the people that took advantage of the free webinar that we put out, where you got the free month of the technical indicators that were out there, and hopefully you guys enjoyed it and make some money off of it. And what I want to do is go over what is taking place now, and really just start with some of the problems that I see playing out with it, just through some emails that I get, and really just listening to other people, whether it be on other websites or whatever. But the biggest issues that traders have in the markets, the problem that I see: one, they don't have a solid trading system. Two, they are listening to the wrong people to decide whether to be buying or selling. They are using market timing indicators, which everybody else uses, not knowing when to get aggressively short or long or to be cash, and anticipating market reversals before everybody else does. Now, these are the problems, and really what it leads to is traders finding themselves getting long at the exact wrong time and getting short at the exact wrong time. And we have our proof on that just through the sentiment indicators that we get, where we always get the extreme bullish sentiment readings when the market's about to roll over, and extreme bearish readings when the market is about to make a bottom. And the solution to this is what we do, and what we try to do at Sentiment Timing is we have a trading plan that has been tested and proven, and then you follow it to a T. So we have, Woody puts out the technical timing indicators to anticipate when the market is going to reverse, and a lot of these dates are weeks and sometimes months in advance. Knowing that, I follow that date and use the sentiment. So our trading plan is based off of sentiment as well as the technical timing indicators, and then we use the regular technical analysis. Stop listening to the market gurus on TV. They're telling you what they want you to do. They are not telling you, they're not giving you information that is going to make you money. They're telling you to get long because they are long. They're telling you that the market's going to go down because they're short. Free information. It's exactly what it is. Free information. There's a reason why they're not charging. People aren't just that nice, and they're just not going to turn around and give you free information for the heck of it. They're there to somehow try to make it into a paid subscription, and they're giving you advice. And the reason why it's not a paid subscription for what you're reading or could be reading is because it's not proven. They don't have a proven message. The market is a sum-zero game. For every buyer, there has to be a seller. If everyone is following the same market timing indicators, whether it be Elliott wave, cycles, everyone's going to be on one side. And as we have seen over and over, when the majority are on that side, it's typically when the market is going to do the exact opposite. So, it's when you sit there and everybody's using Elliott wave or a cycle or something like that, they're typically all running off the cliff at the same time, because the indicators aren't right. And if you're not able to combine the sentiment, technical timing indicators, or cycle turns altogether, then you're only using half the formula. So not knowing when to get aggressively short or to be long. The solution: there are times when everything lines up for a trade, and that is when you want to be aggressively long or short. That's when you have the technical timing indicators in place. That's when you have sentiment either at bullish or bearish extremes. That's when you have your Elliott wave that I'm using that's lining up with the 5 waves up. We have bearish divergences. You have resistance. It breaks support. Whatever we look at on that part of it. But the thing is that when everything lines up with that, you get aggressive on the either long or short side. When things are in a choppy environment, you either lower your trading expectations, meaning that instead of looking for your home run trades, you take little trades here and there, and you take 15, 20 points on the S&P instead of looking for 100 or 200 200 points. And that's really what it is. And if you're not really that fast of a trader, you stay cash. Cash is a position, and not a lot of people understand that, where you really, there's times when you don't want to be in the market because you don't have to be in a trade every day. If you think you have to be in a trade every day, odds are you're going to lose, because you're looking at it more of a gambling end of things instead of making educated trades, and that's really the way it is. And like I said, there's times when you do not want to be in the market. You just want to sit there and let the dust settle. So anticipating market reversals before everybody else does. There are tons of websites out there, as well as market timing gurus that do it, and they try to predict when the market is going to top or bottom, and for the most part they fail miserably. You've seen firsthand how Woody does this. These dates are put out weeks, sometimes months in advance, and it's amazing how they follow so closely. And it's, again, one of the advantages that we have is having these technical turn dates, knowing when to expect a top, when to expect a low, and then being able to use investor sentiment to back up that position, whether it's going to be topping or bottoming. And then we just use the technical indicators and we look for a buy or a sell trigger. And if we're looking for a top like we are right now, you wait for a sell trigger. Once that sell trigger is triggered, you put your stop above. If it's wrong, guess what? You're only taking a little bit of a hit. You're not taking a big hit at all. And does it mean you go long from there? Absolutely not. What you do is you just wait for the next sell trigger. And that's really how you did the solution to navigating through the stock market and making money consistently. So again, this is, these are the tops. This is the report when Woody was saying on 3/12 that he was looking for he's looking for the next trading high due on 417 or 418. 418, that was exactly when it was. He was looking for the low in early May. This was early May. And from here, he was looking at 525 as a top. We got the sharp drop. But then there was even a 6.5 top. That is where we are right now. We're on June 5th. So we've seen this before where we've made kind of a double top, not as far as price-wise, but as far as date-wise, where we made a top, we had a big drop, and then we come up, and then into the 5th is your secondary top. And that's really what we're looking for. And once this ends, we are Woody's believing that we're going to be heading into a minor kill zone. And this is what I'm tracking right now on the S&P, is once we get the trade trigger, we are going to be looking on the short side. And right now you can see we have bearish divergences. If the S&P can break above this level right here, if it can hold above this actually get above the 2762, then you're just gonna be on hold on the short side, and you're gonna wait for the next area for resistance or the next sell trigger. And if you jump long right now, sure, we could go higher. There's no doubt about it. I've seen that stuff happen before. And but is it safe? No, because once this top happens, this is what happens next, and it may be a minor one. So it may not be as large as this one, but this was a kill zone move. So knowing this, and then knowing when to expect a low, is important. And this is like the type of information that you get all the time with sentiment timing. So if you guys are interested, what we are doing is this. You'll see it on the page that you're on here. We're actually going to give you a 33% discount. It's not a monthly discount or anything like that. This is what you would be paying per month. It's $99.99 per month instead of our $149 per month. Or if you wanted to do just the technical version, which you've been getting from me, that is going to be $69.99 a month. And again, you wouldn't be getting the actual reports like this as far as what the dates and stuff like that. You would be getting just my technical video reports as well as my morning notes. And if you are looking for the yearly version of it, it's $500 for the year. So if you guys are interested, do it. But we have some really, really interesting times coming right now. Again, you really want to be on the right side of the market. Don't believe in this big big rally right now, even though you want to be a little bit cautious when you're shorting. Wait for the trigger to come into play, take the short position, and then from there, most likely once these lows are taken out, we're going to be heading down to test the 25.52. And you really, whether you trade options or futures or something, you really only need one good trade like this that can pay for our service for the next 5 years or sometimes even 10 years. So with that, have a great night, and I will talk to you guys next week.